Futures Radio Show, sponsored by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world effectively manage risk. For access to free educational tools and resources for the active individual trader, please visit activetrader.cmegroup.com.
Every day, traders and investors dive in to tackle the ever-changing markets to find opportunity. Futures Radio Show is your number one source for answers to the questions that all market participants want to ask. Veteran futures trader Anthony Crudele sits down with the most influential leaders and top traders in the industry. Now, here's your host, Anthony Crudele.
Hey everybody, thanks for tuning in for this episode with Yra Harris and PAX Kenah. Remember, new shows are posted on Mondays and Thursdays. You can subscribe to the show on iTunes and YouTube. If you're enjoying the show, please leave a review on iTunes. Before I play today's interview for you, I want to give a shout out to the great sponsors of Futures Radio Show: CME Group, Trading Technologies, FTSE Russell, RJO Futures, and Top Step Trader. To learn more about these sponsors and the important things they are doing for futures traders, be sure to click on their logos on futuresradioshow.com. Today I spoke with two of my very good friends, independent trader and writer of the blog Notes from Underground, Yra Harris, an independent trader and president of the PAX Group, Kenah. PAX and I are both avid readers of Ira's blog, and we use his macro insight to help us day trade futures. So I decided to have Ira come on the show, give us his top macro themes, and have PAX and I talk about how we use his macro themes to help us with our day trading. Ira explains how algos give trading opportunities, and last but not least, PAX asked Ira if he thinks the search for yield can lead to buying of U.S. equities. So without further ado, let me take you right to the interview with Ira and PAX. Ira, there's a lot going on right now in the macro world, but what is one macro theme that you were focused on and trading?
My biggest has been, as much as I like to watch the yield curves and they're important to me, but the gold versus all the currencies, because as I've flippantly have talked about, that people say, "Oh, you're a gold bug," and I go, "No, I'm not. But are you a fiat currency bug?" And in this realm of negative interest rates, and let's face it, the emphasis is on trying to, if not depreciate your currency, at least keep it from appreciating, which creates a negative environment for it. And that we saw play out to a T with New Zealand. It's almost a week and a half ago, maybe a little more, when they cut their interest rates 50 basis points from 1.5% to 1%. And people were expecting the 25 basis point cut, but it really reflected that the New Zealanders were worried about the strength of the Kiwi, that's what their currency is called, versus the Australian dollar. And we had talked about that in real time. And what it led to, of course, is now that the Australian dollar has appreciated about 3% against the New Zealand currency. So you see that, and this is all in place. So that means that people have to go somewhere else to at least preserve some value, and they're using gold as a preservation. And it's not about, and this is where people have been mistaken and missed the boat on this, is that it's not about inflation. It's about the credibility of the central banks and nothing else. We've had two articles. We had one on over the weekend from James Bullard. It wasn't an article, it was an interview he did with the Financial Times, in which he talked about that really central banks have just lost their way and they really don't know the outcome of any of this, which is what I've been trying to hammer home to people for quite a while. And then, of course, we had Bill Dudley's piece today, which has gained a lot of traction, but is more of the same. So you see that the metals, silver and gold, both had very strong moves up again today. And this has been the central theme. Now, coupled with this, of course, and people, and I know, Anthony, that people, as you've told me, are very intrigued about this. We've seen the yield curves invert. And typically when you see yield curves invert, again, we can't time it. We can trade it, and what you see, but it's very difficult to time it. And when I say it's difficult, I know that's not a good enough answer for people. But having studied this as long as I've had and watched the way that things play out, the emphasis becomes this can go on. This can go on, meaning the curves can do these things, invert or stay flat for quite a while before you see the economic slowdown that they tend to portend, or some type of financial situation that they portend. I can't tell you what the duration is. I've seen it in 3 months, and I've seen it take 16 months. So people say, what good is it? Well, what good is it? You get a lot of intraday activity as people try to establish themselves. What good is it? And then that's the importance of it for me, because, do I put on my investor hat or do I put on my trader hat? My investor hat says, this is a caution sign. My trader hat says, wow, there's going to be all types of volatility emanating off of this, because it now is the mainstay of the discussion. You can't turn on Bloomberg or CNBC without them talking yield curves and the importance of them, or the lack of importance of them. So there's a lot of battle. The battles are going on, and they're real, and because people are trying to determine what the real impact of this is and trying to understand it. And okay, let's have a go at it. But that opens up, from the global macro perspective, all types of trades. I mean, there are trades galore, and they're not just focused in the U.S. The European bonds have been an unbelievably great day trade. Now, to me, they're a worthless investment, but they are a great trade. And there are those who tell you, well, they have been a good investment because it's been a one-way move up in the price of those bonds. And that's true. But I couldn't go home, without having some type of spread on. I would never be outright long, because that's the definition, as they say, what's the definition of insanity? Doing the same thing over and over again and hoping for different results. That's insanity. People who buy sovereign debt yielding with those types of negative yields, with any type of negative yield, to me is insanity. But again, we quote John Maynard Keynes that markets can remain irrational far longer than you and I can remain solvent. But in that irrational, and that's my point that I'm trying to make here, Anthony, in amidst that irrationality, there can be great trading opportunities, just not very good investment opportunities. And you have to be able to discern between the two.
Absolutely agree with you. And I want to bring PAX in here now to join the conversation. And before we get to you, PAX, I want to make a couple of comments on questions I get from people on Twitter and emails about me following the macro side of things, specifically your blog, Ira, which PAX and I read religiously. And we've both talked about how we use it in our day trading. And I get a lot of questions as to how we do that. And I think that the mistake that I think a lot of day traders make when they think about some of the things you just said, and just, when they're reading your blog and they're just looking at macro in general, is that they think too much about ultimately where we're going. And then it changes their mindset from the day trading side of things, so that they start focusing on this big picture direction, and it can then hurt them possibly on their day trading, instead of saying, okay, there's a bias going on right now on the macro side of things. And what I have done is understand that, look, there's a theme going on, and instead of focusing on ultimately where it's going, trading the journey along the way and using that macro bias, that understanding of what's happening in a macro theme, to help me day trade that direction intraday a little bit more aggressively when those types of trades set up. Because as you just said, there's just trades set up galore because of this, because it's creating price opportunity. And instead of making the mistake of thinking, ultimately, where are we going to go, and overwhelming myself with that, I say, okay, this is happening. Let's see if my intraday technicals align with the directions that Ira and others I follow with the macro theme line up. And then those days are days where maybe I'll trade more aggressively increase my risk. Well, there's a lot that goes into determining whether or not I'm going to increase my risk, but that would be one way. And then knowing that if I have something that's working, to maybe hold it a little bit longer than I possibly would, versus if I'm going against the macro theme that you were discussing, maybe I would trade smaller and maybe I'd be quicker to cover, not thinking they would get to these targets. Pax, I want to bring you in. You heard what Ira said. You heard what I said. I want to pick your brain a little bit and hear your thoughts.
Well, I agree, Anthony. And, I think it's interesting when Ira said that whether he has his investor hat on or his trader hat on, these kind of conversations remind me of being on the floor. I learned more from traders like you and Ira than I did in my 4 years of college, just because we were able to ask these sorts of questions and talk about these sorts of ideas and get a different perspective on them. So last week we were talking on Thursday, Ira and I and Judd, we were talking just about these sorts of things. What's going on with the Italian bonds leading the rally up, followed by the, dragging the 30-year bonds up with it. How do we trade that? What does that mean for the equity markets? Looking for, the equities to break off of it. Yet Friday's price action was very strong until the tweet came out, and then you saw a huge pop in gold and a huge pop in the 30-year. I quickly exited longs in the S&P and got short, and have been short since. Again, last night watching the Italian bonds lead the 30-year and the 10-year, the long end of the yield curve up, which made it very easy for me to get long in the 30-year this morning. It's these sorts of ideas that, from people much smarter and much more well-read than I, that I really miss from the trading floor, but that we're able to keep going through good, rational conversation and asking a lot of questions.
Hey everyone, I hope you're enjoying the show so far, but I want to pause and thank one of our sponsors, Trading Technologies. I started using TT in the year 2000, and I love it. It is by far the best trading platform I have ever used, and I've tried a lot of them. With TT, you can trade the global markets from virtually anywhere in the world. They are the world's fastest commercially available futures trading platform. I highly suggest you go try out TT, especially because you can try it for free. Just go to tryttnow.com and set up your account. Ira, I want to go back to you now. You heard from me and how I use your blog and macro themes in my day trading. We just heard from Pax, how he took some of the ideas that you gave him with the Italian bonds and the 30-year bonds and how he used that to help him in his day trading. You and I have spoken in the past many times on how you use fundamentals and these macro ideas that you have as the basis for a trade, but then you use the technicals to help you confirm those ideas, those themes. But we haven't talked much about how you use it intraday, day trading. Can you share with us how you use your macro themes to day trade?
Okay. So I'll put together a picture, and Pax just laid out one of them, which is the Italian bonds, which, in the cuckoo room, we've talked about what happens with the Italian bonds, and that one day they sold off hard because the government, of course, was going to be dissolved, and everybody took that as a negative. And my viewpoint on it was, well, let's watch this. Salvini is a little smarter than a lot of people are giving him credit for, and he's trying to play something here. So the Italian bonds, the BTBs, now if you don't have them to watch, that's shame on you. I have to, I spend a little bit more money, but I hope that it's going to lead to make me a lot more money. And watching and being able to trade all the European instruments on Eurex and to monitor them and chart them has borne tremendous fruit for me. There's great opportunities there. So, but I watched them, and they held at a very critical level. And now I think, I'm going to pull the chart up right now. From when that announcement came, we broke down. Now, this is on the 9th of August. The price broke down to 136.90. We're at 144.60. You've had almost an 8-handle move. That's 800 ticks in the Italian, straight up from when that, and where it held was very important, and the market got to play out. But that led you, as PAX is telling you, to other trades. Because if you're coming to buy Italian debt, okay, I'm taking you inside the inner sanctum of my insanity. If investors or whoever traders are willing to buy Italian bonds, which in the face of a government falling and all these other negative things that are going on, then they're telling you they're chasing yield. When you're willing to accept today the Italian bonds right now as we sit have an effective yield on the 10-year of 1.15. Now this is in a country that is in severe trouble. It's the same. I can go to the UK because we're facing Brexit. Okay, Brexit is a hot button issue, and yet as I keep telling people, if you think it's so devastating for the UK, why are you buying bonds? Why are you buying the UK bonds? You shouldn't want anything with the stamp of the UK on it if you're so worried about the negatives. But yet it's not the case. The British UK bonds are at all-time low yields. And that bigger picture of looking at these things tells me people are chasing yield. They're chasing yield blindly. They do not care. You can throw whatever you want at them. This is the algo-driven world. As PAX, when we were talking the other night, and I'll keep reiterating this, in the algo-driven world, which is just a concept of artificial intelligence, because they're pre-programmed, they're not good at context or nuance. That's my edge. When I look across the board and I put together my global macro picture, and in this case, it's chasing yield regardless of everything else, that's my edge. All algos see are price or headlines, okay? What do they react to? What is everybody headline? It could be 4 words, 8 words, 10 words, whatever, and they're all crafted. When you see that they come across certain news services, the algos are crafted to read those keywords or keyworded, and they react to it, and then it becomes price-driven. Well, I'll wait because I'm looking for a theme that's in the market, and then I'll use my that I've tried to understand the context of all this, and there might be some great opportunity there. There may be none. There may be none, but there might be great opportunity, and that's what I'm looking to do. So as PAX said, where did it lead him? It led him to a vehicle that he could trade this morning when he watched, or starting yesterday at around 10:30 in the afternoon or 10:30 in the morning, the Italian bonds really started taking off. Interesting, during the G7 meeting, which also was an indicator for me because it was a love fest and everybody felt comfortable. So you know what? When you feel comfortable, you're willing to maybe take some risk on things that you otherwise wouldn't, but you've sold yourself on that narrative. It's all good. You know, it's like I always like to use that scene from one of my favorite movies, The Time Machine, the original one. And what's his name? The hero, he meets this woman in his time when he travels back in time, and he's talking to her, and she says, and there are these sirens going off, and he says, "Weena, what does that mean?" She says, "It's all clear." What's all clear? I don't know, but it's all clear. And that's what some of the nuance that you'll get in the market. Yesterday, the G7, it was a love fest, so it was all clear for risk on. So we had a total risk on day, right? That's what it meant. It's all clear. When things get disrupted a little more and they're not so all clear, then you have to sit up and take notice of that in that light. But both will give you a trading opportunity. Do I make that clear?
Absolutely. And PAX, we're going to get to you here in just a second, but I want to take a moment to not only talk about how understanding the macro themes gives us opportunities, but how it keeps me out of bad trades. And I want to talk specifically about the 10-year Ultra. That's a market that I trade regularly. And by reading your blog, Ira, understanding that the macro theme is up in that market, I know that when I'm getting short trade opportunities to either be smaller and trading closer to risk or to not trade at all. So I'm going to be more aggressive on the longs. Those are the trade opportunities, but I'm also going to keep myself out of some bad trades because I understand the macro theme is up, and I'm going to be a little bit more patient, waiting for an upward trending market that's supported by a macro theme to be in right away on a short signal. And the same goes for a correlating market or opposite correlating market. For example, if I see the 10-year blowing through resistance and I get a long set up in the S&P, well, I'm not going to be in a big hurry to buy the S&P because the 10-year is blowing through resistance. PAX, I want to go back to you now. You heard from me. You heard from Ira. What are your thoughts?
I think, Anthony, that's a huge, huge point. Just even yesterday, or going back to Friday, the S&Ps were trading at 29.10 to 29.20. We had the first of the tweet storm come out. Gold popped from 15.16 up to 15.40 on its way up to 15.40 up to 15.5. I saw that pop, and immediately that I trade the opening range in the S&P. I saw that, and I immediately alerted the traders in my room to look out for this break. Here we come. Make sure your stops are in, and make sure the reverse stops. Again, like you're talking about, Ant, make sure that we're trading close to risk. Really good trade definition. So once we got back through the opening range, it was easy to be short. Now, going back to a conversation that we had with Ira on Thursday, we were looking for a tweet storm to come out talking about either Chinese tariffs or even actual tariffs in going into fresh European tariffs. Well, we got the Chinese tariffs, and that dragged the market down. It was a very nice trade. I missed the gold trade, but I caught the S&P trade. I caught the bonds this morning, and none of it. I loved what you said, Ira. Algos don't have context and nuance, and that's our edge. And you're absolutely right. So in that context, I'm able to define my risk better, and I'm able to hold trades longer when I have an idea of what's going on. And for traders like me, traders like you, we're trading from home now or an office someplace, and I don't know 20, 30 people around me I can bounce ideas off of. I go on the internet to look up news, and it's slanted or it's crazy or it's whatever people are saying. But I know that I can go to Notes from Underground, Ira's blog, and I know that even if I don't understand something, and I tell people all the time, if you don't understand it, do what I do, look it up. Because as the Italian bonds rally led me into 2 or 3 different trades in the last few days, so does reading Ira's blog leads me into reading other writers. Daniel LeCallier had a piece out today that I need to get caught up on. All kinds of different macro ideas that now I'm getting an idea of how to understand things, and then pull that onto my screens and use that for my benefit.
Yeah, exactly. Everybody's heard me say thousands of times on the show, it's all about execution, right? So what I wanted to really talk about today, and we have, is you could read the macro themes, understand them, and just because you're not trading on that time frame, they can help you with your day trading. And Ira, I'm going to give you the last word today, and we've talked a lot about some of the things that you're focused on. We talked about the how PAX and I use your blog and other macro traders' blogs for execution and day trading. Going forward, what is a macro theme you think we as traders should be keeping an eye on?
Thanks, Anthony. And this is, I'm just sitting there and I'm discussing it with myself, which I always do. Here's what is important, because today an important piece came out this morning, and I knew it was going to gain some traction to be discussed, which was previous New York Fed President Bill Dudley had a piece talking about how the Fed should not enable Donald Trump's trade policies by continuing meeting them with lower interest rates. That's fine. That's fine. I have actually discussed this ad nauseum for 5 months, and talked about the trap that Donald Trump was laying for the Fed, which I believe it's a trap, and that's what basically Dudley says, that they've walked into the trap, because Trump knows that if he wants to turn up the tariff rhetoric, it has a negative impact on equity markets. It makes financial markets nervous, and the Fed is forced to respond. Which, why else did they cut rates on July 31st? It was a response to Trump trapping them, and Trump wanted more. And then you got the speech from Jackson Hole. Trump wanted more. He didn't get it. Boom, the rhetoric gets turned up. This has been very consistent. So Dudley says, he advises, don't fall into the trap and stop cutting rates and stop enabling them. There's not a word of that I disagree with. But here's where I gained from this in reading what Dudley had to say. Not one mention of the dollar. And trust me, this is the final. Well, trust me. Don't trust me. Go do your work and read it yourself. Don't trust a word I say, because I'm here to dispel narratives. And anybody who reads my stuff knows that I build a lot on Epsilon theory, which is Ben Hunt's great work. That's far more difficult than my stuff to understand, but he talks about the importance of narrative. Well, to me, the narrative now going forward, I don't care what they're talking about on CNBC. I don't care, because that's a bunch of salespeople who meet and exact, and they're trying to, build customers. And it's all to that narrative, selling Wall Street. I don't care about it. What I care is, if they're right, they're right. But in this venue, in Dudley's speech, not one word is mentioned about the dollar. So Trump's final effort to trap the Fed, because the Fed says, oh, we're not cutting rates. We're just going to sit here. You figure this out. Then the White House will ramp up the currency war. And I mean a legitimate currency war, not around the edges. They will start talking about ways to start depreciating the dollar. And don't forget, that's not a Federal Reserve mandate. That's under the authority of the Treasury, which is Mnuchin, who readers of my blog know the way I feel about Mnuchin. And it's been 2.5 years of constant banging that drum. But they have that power. And Bob Lighthizer, who's the mainstay of Trump's trade agenda and is a very tough negotiator and a very bright guy, and who was very involved in James Baker's Plaza Accord back in 1985, Bob Lighthizer knows how to use the tool of currency depreciation. People say, oh, they don't have enough strength. They don't have enough strength? I'll take you back to 1998 when Bob Rubin was Secretary of the Treasury, and they intervened on the yen in June of 1998 to drive the yen higher. The Treasury has a lot of power. And just the jawboning and the tweeting, we are going to get into some very, very, very powerful FX, foreign exchange. So this is going to become something to trade. I can't tell you exactly when it's going to happen, but it's on my radar screen. It's something I'm going to watch, and I'm going to look all around the edges for, to find when, in fact, it is really getting into play. So from this moment on, the only way I've been trading the currencies is really against the gold. As people have listened to us, Anthony, and certainly PAX knows the gold currency, and then my favorite was the gold Swiss. I'm not looking to buy dollars. I know a lot of people are bullish dollars, and they're going to tell you about the interest rate differential. Which, listen, I'm a fundamental analyst who's been doing this for 42 years, and I understand that. But again, trading is a dynamic event. Markets are dynamic. If you operate with static lenses, you're going to get crushed. So now, is dynamicism going to change? I believe it's going to change, because Dudley's article just makes Trump that much capable of using that tool that he does control. And that can wreak all kinds of havoc upon the global system. So it's something that I'm going to be watching very closely. and I'm looking for it to gain traction in my trading narrative, and the one that I developed, because I think the dollar is now going to become a tool in Trump's hand. It's one thing to push the Fed. It's another thing to play with the dollar when he has control over it.
Hey everybody, I want to take a moment to thank one of our sponsors, FTSE Russell. They are a leading global provider of benchmarks, analytics, and data solutions. The Russell 2000 Index is a key benchmark for small cap U.S. stocks. Be sure to check out the E-Mini Russell 2000 Index Futures, contract symbol RTY. For more information on FTSE Russell and their products, please visit FTSERussell.com. Great insight, Ira. PAX, we have a few minutes left. Any macro questions you have for Ira?
Yeah, Ira, is it possible that in a world starved for yield, and I mean a whole world, we have almost, as you mentioned earlier, every major developed country except for us, UK, we don't have negative interest rates. So in a world starved for yield, is it possible that instead of equity markets, instead of the indices falling apart, that maybe the indices have a rally or at least stay steady, aren't as bearish as what I think they are?
Yes. And in that regard, I think that people who talk about the impact from the Trump trade barrage tweets that go on, that sort of affects it because, again, as Rick Santelli has talked about for so many years, Tina, there is an alternative. If people are willing to buy gold, they'll be willing to buy equities in the short term because, again, money's so cheap. And if you seek out some high-quality stocks, you'll find high-quality stocks. And as long as they're not carrying a lot of debt and they're paying dividends that are far above the 10-year U.S. Treasury note, and Europe, of course, that doesn't even register because I'm looking at my list that I always keep in front of me. I have Portugal and Spain on 10-year debt paying basically 10 basis points. And then Ireland, Japan, Sweden, Belgium, France, Finland, Austria, Netherlands, Denmark, Germany, and Switzerland are all negative. Okay, so I don't even know what that means, but it means something, and it's setting people up for an absolute calamity there. So equities really are not a bad place. It's just that the geopolitical situation makes it very difficult. And of course, we're 14 months away from election in the United States. So all these things, are coming to the boil. And one of the things that I'm looking for, I'm thinking that Trump is going to put tariffs on the Europeans. I know they had a great love fest at the G7, but as I said to somebody, Trump and Macron were all lovey-dovey. But if I was Macron, I'd be very worried because every time Trump calls somebody his good friend and how wonderful he is, the next day he's putting tariffs on. Let's think about the effusive words he had for Xi, and we know what that turned out. So don't equate one with the other. In fact, it comes down to those who the gods seek to destroy, they first elevate to a higher level. So it's one of those things you have to remain careful about here. And so the equity markets, everybody says, well, Trump wants a strong equity market. I'm not sure what he wants. I didn't think he'd even want to be reelected, but evidently he wants to be reelected. But what plays out more, I don't know. I'm not sold, but the market left to its own devices in the world of such ridiculous, and I say that ridiculously low interest rates. It's what Ben Bernanke talked about in Jackson Hole in 2010, the portfolio balance channel, where you switch from less risky assets called bonds, sovereign bonds especially, into more risky assets, equities, and people have been rewarded. And is that ending now? It will end. It will end. What will really set it on fire? I don't know. But it will end. But right now, people come back to it because where else are you going with your money? Bitcoin? No, I don't think so. if you're in Asia and you're looking to move money, to move your, to move out of your currency, Bitcoin is a legitimate alternative until it's not. So where do you go? And I'm telling you, it's much more rational to buy equities today than it is to buy bonds. I think bonds they're setting this market up for an absolute calamity. And people better start asking, who is it that owns all these bonds? If you think bonds are going up and yields are dropping because we're on the verge of a recession, I laugh at you. I laugh at you because, first of all, with the huge amount of deficit, with the huge amount of debt, like the U.S. debt is over $1 trillion, and we have a good economy. So if the economy slows, the debt is going to explode. Why should interest rates on sovereign debt go lower? I understand short-term rates going lower because the Fed can control that and push things. But why? Who would take these absurd low levels of return to take on all that risk? Not I, said the little red hen. Not me. I'm not doing it. And it's a very dangerous world. And so people better start asking, who is it that owns all these bonds? If you're not asking that question and you manage people's money, and I'm talking about portfolio managers. I'm not talking about CTAs and people who manage trading money. I'm talking about people who manage investment money. If you're not asking who's buying these bonds and you're blindly buying TLT or whatever type of bond ETF that you buy, you better ask who is it that I'm in cahoots with buying these debt, because it makes zero sense to me. Zero. And I know that the curve is inverted, but I'm not buying the long end. I'll buy a 2-year, which has been okay because, people say, oh, you've been touting the 2-year versus the long. I said, yeah, I'm not saying you have to put the curve on, but that's where, with my own money, that's what I've been doing. I've been buying T-bills, which have yielded more. So yes, I'm not getting the capital appreciation, although if you bought 2-year treasuries, you did get some capital appreciation. So it really has not cost me all that much relative to the amount of risk that I deem that people are taking on. But that doesn't mean there's not, let's bring it back to trading opportunities and the ability to seek some profit. And Anthony, as well as PAX, I don't care about your political philosophy. I don't care about your partisan stance. This is everything that we discuss is just the ability to try to increase and enhance our profits. That's all. I don't care one iota, and I don't want you to care one iota about what my political leanings are. Because if I'm really doing my job well, you shouldn't have any idea what those are. And I censor people who want to bring their politics into the blog. It's just not allowed. And PAX, you brought up a point before. But if you follow the discussions that take place on my blog, that I generate to get the discussions, you'll learn a lot more, because there are a lot of people who don't understand this. And all of a sudden, people who do and will express it better than I can are out there doing it, and you can really learn a tremendous amount. I learn from my readers. That's the beauty of everything I do. There's a guy, in fact, I'm having breakfast with him tomorrow, Mike Temple, who I didn't know literally from Adam, but he's been writing into the blog for years, and his comments are very good, and they're enlightening, and they offer trade opportunities. Here's a guy who's been long on a consistent rollover basis, the red euro dollars. That's been his trade. You know how well he's done with that trade for the last year and a half? Phenomenally.
I'm sorry to interrupt, Ira, but I've been reading. I read it. About a year ago is when I started to follow the red euros, and I haven't followed the red euros since I clerked in that part of the euro dollar.
Right.
Incredibly interesting.
Well, guys, what can I say? Ira, PAX, thank you guys so much for joining me today. We'll start with you, Ira. Ira, where could people find you on Twitter? Actually, I'll tell everybody it's at Yra Harris, but Ira, give us the website.
Well, it's Ira Harris, YRAHARRIS.com, and then you can get the Notes from Underground from there. And that's the blog, is Notes from Underground. And for those who are steeped in literary and Russian literature, you'll understand why. And the tagline, of course, is 2 + 2 = 5, because this is really, it comes from Notes from Underground, and what Dostoevsky was poking at, who wrote Notes from Underground, the original book, was railing against the rationalists, where everything is balanced. Well, I live in a world of trying to understand, as I say, we talk about narrative, the world is unbalanced. It's unbalanced. And if you believe that the world is all, that the world is all 2 + 2 always equals 4, well, that's great. But I've never lived in that world in my life, really. Everybody, my brother at my wedding, made a toast, and my brother was a professional comedian, but the toast was very apropos. And he said my wife and I were a perfect match because she's a CPA and I'm utterly unbalanced. And I've always been unbalanced. It's the way I see the world, but it's done me well. So that's the whole strength of that, and you can find it there.
Pax, where can people find you on Twitter, and give us a website?
I'm at PAX Trader 777 on Twitter, and my website is thepaxgroup.org.
You guys are the best. You know how much respect I have for both of you. Thank you so much for joining me today on Futures Radio Show.
Thanks,
Anthony. Thanks for taking the time and making this happen. Because listen, this trading world is all about communication, and if you're involved with good communicators, you'll be a lot more successful. Because as Pax noted, that's what was on the floor: the ability to communicate, and we've lost that via the computer. We're now geared to algos and headlines, and headlines distorted by news organizations that write to create the greatest volatility. And they exist. And listen, that's the jungle I choose to live in. Great. That's where I have to hunt. I have to adjust to the terrain. And that's what we always do. We're always adjusting. We don't cry. We don't complain. We adjust.
And overcome.
Guys, you guys are the best. Thank you again.
Thank you, Ant. Thank you. Thanks, Ira.
Thanks, X. Ant, be well.
Thank you for listening to Futures Radio Show. If you have any questions or comments for myself or my guests, please visit futuresradioshow.com and sign up to be a premium member for free. If you enjoyed the show, don't forget to leave us a review on iTunes.